Stablecoin finds itself in one of the toughest spots in the market today, trading near $0.015 after a massive 58% dump in the last 24 hours, and the whole community is trying to understand what just happened. A drop of this size isn't just a normal red day. It's the type of correction that forces investors to step back, zoom out, and figure out whether this is a temporary shock or a sign of something deeper. The chart shows a brutal breakdown where support levels that previously looked strong suddenly vanished. Liquidity dried up fast, and a wave of panic selling washed through the market. That usually means either some internal ecosystem concern, a sudden shift in sentiment, or bigger players taking profit after last week's volatility. And in the middle of all this, stablecoin holders are refreshing charts non-stop, waiting to see if the price can slow down and hold any meaningful base. But even with the heavy dump, the story doesn't end here. One thing about crypto is that coins that fall this hard often become the center of attention. Traders love volatility, and stablecoin is suddenly back on the radar, trending across Twitter, Telegram, and mid-cap trading groups. Whenever a project lands in that spotlight, it opens the door for quick reversals, not guaranteed, but absolutely possible. The market loves a dramatic recovery, and all it takes is one positive update or a sign of renewed liquidity to flip the narrative. If any official announcement drops, stablecoin might attempt to reclaim higher levels much faster than expected. The coin has seen sharp pivots before, and the kind of volatility we are seeing right now often sets the stage for dramatic rebounds. For now, though, the key factor is stabilization. Investors want to see the price settle above short-term floors, regain some buying pressure, and show that the worst of the dump is over. A sustainable recovery isn't built on one green candle. It's built on controlled volume returning and confidence slowly rebuilding. If stablecoin can form that base, then the medium-term outlook starts looking far more interesting. Looking ahead, traders in the US market are keeping a close eye on potential future targets. The first psychological level sits around 2 cents, which would signal that the coin has shaken off the panic phase. Beyond that, reclaiming 3 to 4 cents becomes the next narrative milestone, not a moonshot, but a realistic range if sentiment flips and liquidity stabilizes. Long-term targets depend heavily on what updates the team brings forward.